Floor 31, 6A. M. You are the only light on in this section of the building. $68,000 in debt. A salary that felt like arrival until you saw what arrival actually looks like 3 floors up. The managing director on your floor drove in this morning in something that costs more than your parents' house. He nodded at you in the elevator. Didn't remember your name. You don't complain. You open the model. You get to work. 3 monitors. 1 coffee that's been cold for an hour. A pitch deck nobody above you will put your name on. You are 23 years old, and you are processing a $340 million transaction from a spreadsheet, and the closest you'll ever get to the client is a CC on an email chain. Your world is 1 floor, 2 screens, and a stack of decks nobody above you will credit you for. You never meet the people behind the transactions. You never see the rooms where the real conversations happen. But your numbers are in those rooms. Your work is in the deck. One night, late floor, almost empty, you find it. A number buried inside a senior associate's model. Wrong. Off by enough to matter. $2 million worth of wrong. You stare at it for a long time. You quietly fix it in your own file. You say nothing. Because you already understand, without anyone telling you, that the system doesn't reward honesty. It rewards discretion. That's your first lesson in financial power. And you learned it without a single word being spoken. Your days are 14 hours. Sometimes 18. You stop counting. You watch which managing directors to stand near and which ones to avoid. You don't have power yet, but you know exactly where it lives. You can feel the geometry of this place. Who feeds who protects, who is being quietly positioned for something, and who is being quietly managed out. You are the foundation. And foundations don't get thanked. They just hold everything up. Here's what nobody tells you about this level. The people who make it out aren't the ones who work the hardest. They're the ones who figure out early what the system is actually selecting for. Most people never figure it out. They just keep working. Stay tuned, because that answer shows up at every level above this one, and it's not what you think. 2 years later, you're in the room. Not the main room. The side room where associates sit and wait while the senior bankers present. But you're there, and that's the shift. You're structuring now. You draft terms on $175 million mezzanine financing. You sit across from a CFO for the first time. You explain a covenant breach scenario without flinching, because you've run that scenario 40 times in the past week. That preparation is your only currency at this level. You don't have relationships yet. You don't have a network. You have reps. The deal you're working, a leveraged buyout of a regional logistics company in the Midwest. The model is clean. The margins improve post-close. The debt coverage works. What the model doesn't show, what nobody asks you to model, is the workforce reduction that makes those margins possible. 1,100 people, 3 distribution centers, gone within 18 months of close. You don't think about that. You model EBITDA. You present it cleanly. The deal moves forward. You collect your bonus. You don't think about Ohio. You rationalize it the way everyone does. At this level, you just ran the numbers. You didn't make the decision. You just made the decision legible. That rationalization will follow you for the rest of your career. Then you're managing people, a team of 5. You stop counting your own hours. You think in deal flow now, not hours, not tasks, deal flow. Your compensation has crossed into territory that feels unreal compared to where you started. 220,000 base. Bonus brings it closer to 400 in a good year. You wire money to your parents for the first time. You buy a 2-bedroom in a city where 2 bedrooms mean you've arrived. You close your first transaction independently. A $580 million acquisition financing. Your MD is on the cover sheet. You are on page 7. But in the room, the actual room with the actual client, they're looking at you, asking you the hard questions. Because when the numbers get complicated, the client wants the person who built them, not the person whose name is on the cover. You stop being supported. You become the one doing the supporting and the selling simultaneously. You are the product. And here's where the ethical architecture starts to sharpen into focus. A pension restructuring. Post-close. The acquiring fund needs a 22% IRR. The restructuring makes that possible. You know what it means for the retirees. You don't say it out loud. Nobody says it in the meeting. The deal closes in 9 weeks. You tell yourself the pension was already underfunded. You might even be right. Either way, you sign. You've stopped asking whether the deal is good. You only ask whether the deal is executable. That question is the only one that matters now. The retirees don't know your name. You don't know theirs. The calls come earlier after that. Sometimes before markets open. Sometimes from private numbers with no caller ID. You manage 11 client relationships, each one worth between $4 million and $35 million in annual fee revenue. You are no longer working for the bank. You are the bank's relationship with these clients. That is a subtle but seismic distinction. You travel constantly. Singapore, Zurich, Abu Dhabi. You have dinners with ministers, not politicians' ministers. These are not business dinners. They are relationship maintenance. The relationship is the business. You sit on an internal credit committee, $800 million in revolving credit, deteriorating balance sheet. You vote yes. Not because the credit is clean, because losing the relationship costs 3 times the exposure. It's a political decision disguised as a financial one. Every major decision at this level is, and here's the part that should bother you more than it does. You start to understand leverage in its purest form, not financial leverage, informational leverage, the knowing. You know which companies are about to run a strategic review before it's announced. You know which sovereign fund is quietly building a position before any disclosure. You don't act on it, that's not what this level is about. But you know, and the knowing makes you sharper, more decisive. You walk into rooms already 3 moves ahead of everyone else at the table. That's the real currency at this level. Not your bonus, not your title, what you know and who told you first. Then you lose one, not because of the numbers, not because of the work, because a competing director went to the same private club as the chairman, a club membership, a handshake over a drink in a room you didn't have access to. That's why you lost a $2.8 billion mandate. You don't lose your composure. You don't make excuses. You join 2 clubs within the month. Capital doesn't follow returns alone. It follows relationships, political alignment, and trust between the right people. The best trade in the world doesn't execute without that trust. At the director level, power is relational. You don't own anything yet. You are the bridge between the institution and the people who move capital. Remove you, and the relationship walks out the door. That's your leverage. That's also your ceiling. To break through it, you have to stop being the bridge. You have to become the destination. And when that happens, when you finally cross that line, the rules change completely. Everything you thought you understood about how power works gets quietly replaced by something colder. You're sourcing now, not just executing deals, originating them. Clients call you directly, not your MD, you. Private equity shops route deal flow through you because your judgment has a track record. 3 closings in 4 years. Never missed a deadline. Never leaked information. In this business that is worth more than intelligence, there are 14 partners in the division. You are one of them now. Your name is on the door, not literally, but in every way that matters. You have carried interest in the fund, skin in every major deal the firm runs. When the fund performs, you perform. When it doesn't, neither do you. This changes everything about how you think. You stop optimizing for the annual bonus. You optimize for the 5-year fund cycle. You stop thinking in quarters. You start thinking in decades. This is the power shift that nobody outside this room understands. At every level below this one, your power was contingent on a relationship, on a mandate, on a client who could leave. Here, your power is structural. It's embedded in the carry in the fund cycle, in the institutional memory of every LP who has backed you for a decade. You're not replaceable anymore. Not easily. The system has too much of itself invested in your continuity. You lead a $4.1 billion acquisition of a European energy infrastructure company. 3 months of negotiation. 4 regulatory jurisdictions. 2 competing bids. You run the consortium, your fund, a Gulf sovereign co-investor, a Canadian pension. The closing dinner is in London. The handshake happens in a room that doesn't appear on any floor plan. You structure the offshore holding through a Luxembourg vehicle feeding into a Cayman feeder fund. 2 attorneys, Dublin and Singapore, have blessed it from every angle. The structure is entirely legal. The tax efficiency is substantial. You sign without hesitation. Your carried interest on this single transaction will compound to over $38 million. There are 2 calls this week. One from a sovereign wealth fund in the Gulf, $7 billion seeking deployment. They want your fund to anchor the deal flow. The second from a pension allocator in Toronto, who has been watching your track record for 3 years and is finally ready to move. You take both calls from the same chair. You stop attending most social events. Not because you're busy, because the conversations aren't useful anymore. Someone mentions a stock tip at a dinner party, and you smile and say nothing because you've been inside that company's cap table for 2 years. The distance between your world and theirs has become too wide to bridge in a single evening. Your social world has narrowed quietly without you noticing to people who control capital. Old friendships don't disappear. They just become infrequent, and then they become history. That's not a lifestyle choice. That's just gravity. Capital pulls capital, and somewhere in that pull, it takes everything else with it. Nobody warns you about that part. Then one day you realize you don't have a title anymore, just a name. Senior advisor, chairman emeritus. A name attached to a family office, attached to stakes in 4 funds, 2 private banks, and a reinsurance vehicle registered in Bermuda. You are 69 years old, 44 years inside the machine. 3 central bank governors know your name, not your title, your name. Because the information doesn't just flow to you at this level, it flows in both directions. You brief government agencies on capital market conditions twice a year. You don't lobby, you advise. The distinction is real. The influence is the same. Total assets under management north of 85 billion. The exact number is known to 4 people. You are one of them. 2 years before any public signal, you see a currency block facing liquidity stress. You structure accordingly, not to trigger the event, but to be correctly positioned when it arrives. When it happens, your funds gain. The financial press calls it prescient risk management. You don't correct them. The cost of this level, and this is the part nobody prepares you for, is that the circle of people you actually trust has contracted to fewer than 10. Beyond that circle, nothing. You have more access than anyone in your life can comprehend, and almost no one you can tell about any of it. You are too embedded to be removed. The system would cost more to dismantle than to maintain. That is not power in any conventional sense. It is something older, colder, and more permanent than power. You don't think about the analyst on floor 31. You never do. But somewhere in the back of everything, in the way you read a room, in the way you already know the outcome before the meeting starts, he's still there. That version of you. Still running the numbers. Still learning the geometry. You just learned it all the way to the end. A boardroom in Geneva. 4 people. No agenda on the table. No presentation on the screen. You speak for approximately 5 minutes. The room listens to every word. Then you stop, and the room moves. And somewhere right now, in a glass tower, in a city that never stops moving, a 23-year-old is sitting down at a terminal for the very first time. Badge says analyst first year. He thinks this is about salary. He thinks if he works hard enough, the system will reward him. He thinks the people at the top got there because they were smarter or faster or more disciplined. He doesn't know yet what the system actually rewards. But the machine is patient. It always has been. The terminal blinks, the market opens, and another life begins, one level at a time.